6 weeks ago, the bears were having wet dreams on a collapse in the markets, stock markets, real estate, and Bitcoin, as we touched $24,900 for a matter of minutes, probably as long as they last. But we are now up 24% at $30,800. This has left many by surprise. What I want to do in today's video is answer what the hell is going on here using our Wyckoff schematic. It has been nearly 5 months since we have updated this, so make sure you have hit that like and subscribe button as we continue to follow the series of the Wyckoff schematic here on the channel until we get that final breakout confirmation. Now, I'm not a complete perma bull, as many of you probably know, and I do want to look at some of the alternatives here where the market could collapse, but there is a very important point to make out of this in case we do collapse to our 50% level that we're looking at. And I want to follow that up with other reasons throughout the video. So make sure you do stick around, hit that like and subscribe. And if you want to dive deeper into your own education, link is in the top of the video description for our free crypto and economic report. Within TIA Premium, there is a Wyckoff Accelerator program. So check out the content that we have there. And for now, let's dive into the analysis, starting with the macro cycles on the US stock markets. So let's start with a recap of the S&P 500 as it closed out last week pretty low. It dropped to nearly the lows that it had seen early in October. Now, what we've seen, I guess, over the last several weeks is that the S&P has gone down, whereas Bitcoin has continued to climb. So there is a divergence here happening with the stock market and BTC. But when we look at the macro cycle here, so a bit longer out than a few weeks or a few months, we can see that both markets have basically bottomed around the same period, Q4 of 2022. So there is the low there. Yes, there is still a lot of macroeconomic data that is floating around saying that the market is about to collapse and take out the new low, take out 3,800 points. But when we look at it in a more macro picture here, the 50% level comes in at 4,050 for the SPX. And if we want to look at the S&P futures contract, so the E-mini futures, that price is roughly 40,070. So 4,070. So we have 3 red months so far. October's not over. And when we look at a few schematics of October itself, this is your previous October of 2022, the market went down in the first half and then managed to recover from that point pretty significantly. Are we going to see that happen over the next week? Let's wait and see. Of course, I don't have the answer to that, but what I would be looking for is any further support at the 4,200 level, which was previous pretty solid resistance at that point, and maybe we see a bounce from there. This move down, which is so far lasting 3 months, has been seen before in very major bull markets. 2009 was the low. We had a 2010 drop. So you can see from right here, we got 1, 2, 3 months down. It went green because the month was lower, but then closed higher. So we're not at the end of October yet, but we've also seen 3 red months before in moves down. So that was 2011. We saw it again in 2016, which was a pretty significant bear market for that period. It didn't really move anywhere until we finally got going in late 2016. There was still another 3 red months before the election. Market skyrocketed from that point. We had 3 more months down. Even though this one is green, there was still lower highs, lower lows inside, and then lower highs, lower lows again. So it's not uncommon to see that, especially at the beginnings of moves. You can see this one topped out, had the move, and then started to move higher again. So it's not uncommon. Just keep that in mind as we continue to sift through the data, especially with what's coming up for Q4 in the year in a pre-election year as well. So we're still sitting here in October and we can still see some further testing of that support. Q4 for the pre-election year, which is right here, that's your 3rd year. Prices still look like they head up, but Q1 could be a little bit of a problem for the market. So keep that in mind, especially if we see a strong end to Q4, because like you see strong moves to the upside, they have to level out and have some sort of consolidation, which is what has happened and caught out a lot of investors who came into this move late. We talked about the lows coming into the market many times in 2022. You had June, you had October and September, you had December, January, and then March as well. And the breakout gave you that one final signal for the push higher. Now, all these people who came in late of course, have lost out on their gains and now basically sitting at break even, if not in a loss. So if you're looking at the second half of quarter four to pump, be careful of that first quarter. Maybe the market goes flat at that point or pulls back again. Now for Bitcoin and the Wyckoff schematic, I have a few problems that have come up as we have looked at the schematic over time. This is what it looked like when I was reviewing it in June. Now we want to take a look at it, the update here. So I've got a bit more of a fresh, clean looking chart. So I have a couple of options for phase D and phase E, which we'll get to as well. All of this has been reviewed using the Wyckoff rules themselves, so looking at the phases and then the terminologies with each of these different points. So preliminary supports, selling climax, and so on, automatic rallies, secondary tests, all that sort of thing. So we currently potentially sit in a phase D. The thing that I've got a concern with is the length of phase B itself. Phase B typically looks a lot longer. Does that mean it has to happen exactly like that? Of course not. And that could mean that phase D and phase E started way back in March, and that this is a new phase E with the prices being above the previous trading range. So that's how those trading ranges are measured there. You've got the tops of them, and then you've got the trading range within the zone as well. So that's another possibility. Now, short of me going through every single phase and covering everything here, making it an entire educational video, which could last an hour, we're just looking at what is the possibility of moving forward in this video and what some of the areas of concerns are. So I haven't changed my view on the lows. I think the lows are in here in 2022. So that's the November. I don't think this is going to get broken and closed beneath. This is the last point of supply in March where we had some big volume push out. So that sits us with this particular area potentially being a phase E. Now, if it's not a phase E and this was a long phase D with the market heading up, testing this level here, which would make this a higher trading range. So that would basically move this bar all the way up here and the market testing these levels. Then once Bitcoin breaks out of 32K or 31,850, then you would be entering phase E. So that's what I've got down here, phase D and phase E. So the areas of concern are the length of phase B, and the length of phase B is roughly only 14 bars. So about 3 months. But when we look at the schematic, these areas can sometimes last a year or more. So it doesn't mean it has to last a year, but sometimes they can last a year or more. And typically you see the accumulation ranges last for a lot longer than that. So that would have our schematic looking more like phase D and phase E on the breakout through March, where the market basically pumped through that area and you had high volume here. You had volume drying up, which is exactly what you want to see through this period. And basically the market taking off from that point and creating a new trading range, which could mean that this is in fact phase E. And you see the volume drying up, meaning that there's not much supply left on the market and prices could potentially break out at this point, which would be a pretty good reason for a God candle here, or at least in the next couple of weeks, to break the market out of this zone and then create a new trading range. Where does that trading range sit? Well, probably somewhere between 30K and 40 odd K. More areas of concern are the high volume in phase B. So far I've got that in phase B. If this is the phase B, that is significantly higher volume than what you would like to see, because in phase C here, you can see the volume drying up, which is actually a perfect sign that the supply is coming off the market and that the bottom is likely in. And we saw it again through stage D, phase D. You can see the volume drying up again and the market taking off. So that's a good thing there. It is possible that we saw increased volume through phase B because this is a Coinbase chart and more of the trading was moving over to Coinbase because, well, FTX collapsed after that point. So maybe some of the smart money, the inside money, were seeing that and moving their trading volume over into Coinbase. Now, Coinbase could have been taking more supply from Binance as well. So there are a number of reasons why that could be a reason for increased volume at that time. And now we're starting to see the volume dry up as real accumulation takes place on Coinbase. The other couple of concerns here are the total length of accumulation. So the length here is actually fine. If this was to break out this week or next week, then 76 weeks doesn't seem like such a bad time frame. Where did I get that from? Well, I looked at the distribution of BTC just based on the rules of the Wyckoff distribution, which you can also find here. And it was roughly around 70 weeks. So you had the point of supply here coming in, huge volume, market found that and then dropped off from that point. So that's how I got my first reading there to start the time count. And then to end the time count, you had big volume come in where the market broke down from that range, and then that starts the time count for the next range. So we're sitting at a rough count of 76, which is a good thing here, but my concern would be that this previous range, if we were to use this as phase D and phase E, that's only roughly 44 weeks, and you normally see the accumulation take longer than 44 weeks, considering that the distribution took 70 weeks. So that's why I don't think this is the case. And maybe we're seeing some sort of alternative phase D, which is a lot longer than the rest of this stage. And, we start to move into phase E, I don't know, Q4 sometime in 2023. So that brings me to the next couple of concerns: phase D price spread and phase D top of the trading range. So if this is phase D, well, that means the trading range is up here and that the tests back in phase A and B didn't get to those top areas. But it doesn't mean that that phase A could be brought all the way out here and that we're about to see another collapse in the market and Bitcoin to break past $15,000. There is that view in the market. I don't take that view because it doesn't meet the other criteria through all of the other phases here. Who knows? Anything is possible, so I don't want to rule everything out, but there's too many options here, so I have to start crossing some off the list and working off the phases here, the definitions of the phases. It doesn't seem like this is the way the market should be, where you'd have phase A out here, and this was the selling climax where FTX landed and basically crashed the market. So that's why I bring this bar back down into the trading range, and potentially this was phase D breakout, and that this is all phase E in another reaccumulation. So that brings me to the reasons, which we just had a look at: accumulation and reaccumulation. Maybe this was the accumulation and this is the reaccumulation. But remember, I've still got a distribution possibility of this particular range to have a look at in just a sec as well. Not all schematics must look identical. We always try and fit the charts to look exactly like they form on a particular schematic, but that doesn't have to be the case. So potentially, and obviously time will tell, this might not have to line up exactly like the schematic that we've seen before, and maybe this is just another reaccumulation in the market, especially with the volume dropping off. And when we start to break out, we see increased volume. The market dries up again as it comes back to test lower prices, which is typical of those phases where you want to see the market drying up with the supply. And just like we saw at the end of this week, we saw increased volume as it broke out of key resistance levels, which was the $28,400 if you've been following us on the channel, which is another good reason here. Subscribe, like. 1 out of 4 if you haven't subscribed yet, do that. And of course, link in the top of the video description if you want to learn more about trading and investing full time across Bitcoin, stock markets, and real estate. So this is where we currently sit. So I'm going to do some more updates from this point. Potentially, if we get the breakout of 32K this week, tomorrow, next week, whatever, Q3, then we would move these phases to show and line up for that, which means we've broken out of those tops. Can things change? Of course they can. This is all a work in progress, and we're trying to use this layered on top of our other indicators like our Gann swing indicator and other means to give us a reading of what's going on with the market, especially our timing, our 4-year cycle, which we looked at in the previous video. You'll see that pop up at the end, so stick around for that. Now, to the distribution. So the flip side here, I don't want to rule anything out, but of course I have to lean one way more than the other because I'm investing in the market and I can't equally put my money on the long and the short. Why would you? You cancel it out and you might as well be sitting on the sidelines anyway. So I'm leaning to the bullish side. Here is the bearish for you guys. Distribution schematic. Now I will point out one thing, one major thing. If you think it is the distribution using this schematic, remember the time frame you're on. This could be the distribution. It's going to be very, very short compared to the accumulation. This could be the accumulation. Think about the distribution up here. That's why I went through the time frames. You had roughly 70 weeks of a distribution. Don't expect a potential distribution of 32 weeks to be the distribution that collapses the market, especially after such a significant low, and looking at the macro cycles on the stock market, and like we cover as well, the real estate market, with things heading up at this point. So if this is in fact the distribution, which this chart does a pretty good job at, then sure, you potentially could see a breakdown of 25K, but I'm not ready to commit to a price to the downside of 19.5K, which brings it all the way back to the banking crisis low. So keep that in mind. It could be a breakdown again. You want to see if we get any tests to the upside, some more supply come into the market. So keep an eye on the volume as well. If we start to head down and we get increased volume, that might put some pressure on the support at 25K, which could then lead us to our 50% level, which currently sits at $23,600. That could be the key to getting us to 23,600, which then builds us back up again over the coming months, leading into the halving and takes us into that later part of 2024, where the bull market starts to really pick up. We're probably passing 40 or 50 grand by that stage, in 12 months time or so. And the retail starts to come back to the market, and they'll get really hyped up as we break past $60,000 and $70,000, because that's typically what retail does. So I'm keeping all options open, and we could be right in the accumulation, and the distribution could also be correct, because this is a shorter term distribution, and that could get us back to the $23,000 level, which is our 50% level. And then we start the stair stepping again, which is part of the broader range Wyckoff accumulation, which then takes us past that 32K. So like with everything, it's always just a matter of time. Is now the breakout or the distribution, and we get the breakout later? I'm leaning on the side of the bullish case based on what I presented with you here today. Let me know in the comments section which side of the fence you're on. Top of the video description, I'll leave you a comment down there about the stage of the cycle. Video is popping up here for the previous video we just did, which was on the 4-year cycle update. So stay tuned to that. Otherwise, like and subscribe. I'll be back again with another video very, very soon. Until then, take care and peace out.